This week, stocks rose for the 13th of the past 16 weeks. Jobless claims continued to fall. Retail sales and industrial production up 5 straight months. Index of leading indicators jumped big. Even new housing starts showed a small life sign. There you have it. Let's bring in our ace investors to debate Reaganomics 2.0, my dream, and Reaganomics meeting a hot stock market, the growth trade, as I like to call it. Are they on board? Let's talk with our pal Joe Battipaglia, money strategist, market strategist at Stifel Nicolaus, Lee Munson of Portfolio Asset Management. Now, Lee Munson, I have this dream. This dream is not news, but what was new is what went on last night in Washington, killing a terrible spending bill and passing a decent tax cut compromise. Lee, I want stocks to keep rising. I thought they'd go up much bigger today. You're my bull. What happened?
Well, we had option expiration. So we had, the triple witching. There wasn't a lot of witching going on right now. We also need to have a little bit of a pause. I'm very bullish right now, and I think that what the American public needs to understand is, hey, listen, I was a kid in the 80s, and I got rich. So I'm very excited. I really hope your dream comes true. But I think one of the main reasons why the market had sort of this cap on it today really was the artificial nature of option expiration. I think people need to take pause. They need to spend this weekend, look at some of the names that they like. I think the market can go higher. The Congress sent a signal. We're going to do something very different than what Europe is going to do. We've solidified that now. I think the tax cut is going to give that steroid into the market that's going to make the prices go higher.
My Reaganomics 2.0 has now been described as a steroid into the market, Joe Battipaglia. That's not bad. I accept that amendment. But you don't really buy the market story, do you, my friend?
No, unfortunately, we're back to more stimulus-style efforts by the government to put something into the economy that is artificial. And that is to say, we're extending the jobless benefits. We're going to reduce the payroll taxes. We're going to give some investment incentives to business, but rather modest. Meanwhile, we've done this for 2 years, and all we have to show for it is 9.8% unemployment, a 2.5% run rate in GDP, this at the point of a year and a half of the expansion.
No, but Joe, can I ask you?
And a sluggishness in the economy that doesn't go away.
All right, I don't mean to interrupt. I want you to get your stick out, but when you said we've had this for 2 years, I got to disagree. We have had big government, big spending stimulus for 2 years, and it hasn't worked. The Fed has worked, profits have worked, stocks are way, way off the bottom. But I got to disagree with you, Joe. I think what happened last night in Washington, knocking down that awful spending bill, that puts an end to big spending, if you ask me, and getting some tax relief. This is new. We're going to embark on tax cutting and lower spending. That is a complete change, Joe B., from what Obamanomics gave us for the first 2 years. Now, why wouldn't stocks react positively to that change?
Because it's really more of the same. The Republicans signed on for more deficit spending for things like the extended claims, cutting the payroll taxes. They just want to change the dynamics of the trillion-dollar spending to what they want to spend it on in the first quarter. So this is saying, look, Democrats, we don't want you in power any longer. You were voted out. So we'll take this now over the next 2 months and spend the same amount of money. The deficit next year is going to be exactly the same size as it was this year.
Joe,
the tax rates are going to be exactly.
Why do you care that if we keep spending this money? Because if it's, let's say it's steroids, let's say you're right. Let's say this is all going to end badly 5 years from now. If we're going to make the market go higher by injecting cash in it, Europe's dead right now because of their lack of all spending. Why do you want to make people money, or do you want to be right? I want to make people money. I don't want to be right.
Yeah, my concern is that the government intervention in our economy is making the economy less efficient, not more efficient. It's not creating the new jobs. It's not correcting the logjam in housing, and it leaves the bipolar relationship with the Chinese intact. So we hollow out our manufacturing. We remain less competitive. Capital is treated better outside the United States than in, and now we have the new threat from rising commodity prices falling back on us because it's going to lift the cost of goods to American manufacturers and the American consumer. So that's what I'm worried about in this particular issue.
The S&P has a bigger percentage of its earnings that come from energy than it even does the financial system. Yeah, we know the Chinese story. That's a known issue. And we'll see how that goes after we see some more instability in that country. But I still don't understand, if the market is going up, which it is, if more cash is going to be created, it's certainly not going to go into the municipal bond markets. It's certainly not going to go into long treasuries at this point. So where is that money going to find a home? Does it really matter if it goes into China? Because the Chinese market correlates to the U.S. market. It's going to flow into the equity markets. The price is going to go up.
And
again,
neither of you have addressed what I thought was our very brilliant opening, where we listed all the positive economic statistics that we've had just in the past week. We've really had them for 2 months. Retail sales, manufacturing, leading indicators, lower jobless claims, overhanging all this is profits. And Joe Battipaglia, I have to strongly disagree. Joe Battipaglia, there's a big difference between tax cuts and big government spending. Tax cuts keep money in the hands of people in the private sector and provide some incentives at the margin.
Larry, there's no tax cut here.
By the way,
there's no tax cut here, Larry.
There's a big tax cut for businesses, 100% cash expensing for businesses. That is huge. And
that's
even the payroll
for 1 year,
tax,
Larry.
a 2 percentage point drop in the payroll tax.
I'll take the money. I own my business.
That's right. And it does provide an incentive effect. And since most America was worried that the Bush tax cuts would expire, I'm going to argue the fact that they're going to be stable is, in effect, something of a tax cut, Joe. I want to challenge you on that.
But it's not a tax cut because everyone's take-home pay essentially will be the same next year, except for $1,000 or $2,000 as it relates to the payroll tax. So this is just a sham being portrayed on people as some sort of tax cut. It does not cut the unemployment rate. It has not fixed the problem with housing, and the growth rate in the economy is still rather sluggish, and we haven't gotten past this. Not only are your numbers good for the last couple of months, Larry, we're supposedly in a recovery for a year and a half, but you wouldn't know it when you compare us to emerging markets or the Chinese economy, which are blowing right past us. Meanwhile, the only reason why the dollar is not collapsing is because the Eurozone is in worse shape. So now you leave the developed economies of Japan.
What's your issue about the dollar? The dollar has to be versus something else. So why do you care why the dollar is going up? The dollar is in reference to some other currency.
I do
as
care
long as
about
emerging
it.
markets rig it.
I think the dollar is going up. I think the dollar's going up. Gold is going down. I think there's a growth trade going on. I really believe something important has changed in the last 4 or 5 weeks. I just feel something important has changed. But, gentlemen, let me just get you on the app. Lee Munson, what's your favorite investment right now? Just real quick, lightning fast. Favorite investment on a Friday night?
Favorite investment? I like steel. Shipping has a pulse. And I like cement in Mexico.
All right, pro-growth. Joe Battipaglia, favorite investment?
Global growth stocks, because unfortunately the story is outside the United States, not in it.
All right, I'm going to leave it there. Joe B. and Lee Munson.